China's commodity imports took a turn in October, with a notable exception, iron ore. The big picture: China's commodity imports. China, a global economic powerhouse, saw a softening of its major commodity imports in October. High prices across the board impacted volumes, with crude oil, natural gas, copper, and coal all experiencing declines from September. However, iron ore stood out as a resilient outlier, bucking the trend and maintaining its position as a key import for China's steel sector. Let's dive into the details and explore the factors influencing these import trends. Crude oil and natural gas, price impact. China, the world's largest importer of crude oil, witnessed a decline in arrivals, with October's 11.39 million barrels per day marking the third consecutive monthly drop. This can be attributed to the higher global prices prevalent when cargoes arriving in October were arranged. Benchmark Brent futures reached a 6-month high of $81.40 per barrel during the Israel-Iran conflict in June, and while prices retreated in July, they trended upwards again. Since then, oil prices have been on a downward trajectory, with occasional spikes due to geopolitical events like US sanctions on Russian crude producers. The impact of higher prices is evident in natural gas imports too. October's imports of 9.78 million metric tons were down 11.5% from September, and 7.2% lower than October 2024. It's likely that the decline is from liquefied natural gas imports, as pipeline volumes from Central Asia and Russia remain steady. Copper and coal, price-driven declines. Imports of unwrought copper dropped 9.7% in October compared to September. October arrivals of 438,000 tons were lower than both September's 485,000 tons and October 2024's 506,000 tons. Copper prices have been on an upward trend since April, with gains accelerating from late September, reaching a record high of $11,200 per ton on October 29. Coal imports also decreased, with October's 41.74 million tons down 9.3% from September and 9.8% from October 2024. This decline can be attributed to the low prices of seaborne thermal coal, which have been near 5-year lows. However, with the northern winter approaching and higher domestic coal prices, China's imports are expected to recover by year-end. Iron ore, surprising resilience. Iron ore was the standout commodity in October, with arrivals of 111.31 million tons. While this was a 4.3% decrease from September's record high, it was still 7.2% higher than October 2024, and marked the 5th consecutive month of imports exceeding 100 million tons. The strength in iron ore imports isn't price-driven, as benchmark contracts in Singapore have been stable around $100 per ton this year. Instead, it appears their inventories are being rebuilt, with port stockpiles monitored by Steelholm rising to a 7-month high of 138.44 million tons in early November. With inventories still below the November 2024 level of 150.7 million tons, iron ore imports are expected to remain resilient as we head into the end of the year. And this is the part most people miss: it's not always about prices when it comes to China's commodity imports. Take coal, for example. Despite low prices, imports dropped due to other factors. So, what do you think? Are prices the sole driver of China's commodity imports? Or are there other factors at play? Share your thoughts in the comments below.